Hi folks, Scott here, and this is the wrap for Tuesday, May 14th. So, a very interesting day today. We had range expansion, but to the upside. And I even mentioned last week in a video, I'd be looking to play range expansion to the downside. I really didn't expect it. Now, that doesn't mean that I lost money, because I didn't lose money, but that's why you got to be open-minded in both directions. But before I get into today and all that, let's first talk about what tomorrow may bring us. We had range expansion to the upside. In fact, we closed up more than 1.5 times the size of the past 5 days true ranges. So if you take the average of the past 5 days true ranges, this total move from yesterday's close, because the gap technically did not fill, to today's high, was a little more than 1.5 times the average move of the past 5 days. So I thought it'd be interesting to show you the results of fading gaps following range expansion to the upside, as I just defined, and closing with at least a 20-day high close. I did a 200-day high close, but it's only happened about 20 times, so I want to get the sample sizes bigger. 200-day high close was generally consistent with what I'm about to show you, and there you go. So it's happened about 40 times over the past 10 or 11 years, and maybe a slight bias for gapping up, don't know. One of our members in a trading room that has MTG Gap Trader, same backtesting tool that I use and that I'm using here, tested 9 consecutive higher daily lows. And if I remember correctly, he said it's only happens 7 or 8 times with, I can't remember the numbers, either 6 or 7 of those times that had gapped down the next morning. So some interesting cross currents in play. But bottom line is, historically, this has been a very good setup. Check these numbers out. So this is using an end of the day stop, not something I use, but a good place to start your analysis. And a gap down has had a strong profitability. Gap up has had off the chart win rate 21 of 23. Now, I mentioned the folks in the trading room, I was actually a little bit reluctant to show this because last night I showed good numbers, not this good, but good numbers that favored gap fill for today as well, and we didn't get it in, at least not the ES or the Russell. We did get it in the NASDAQ and the Dow. But then I saw this, and I want to show you this. This will keep your excitement hopefully a little bit in check. It's only had 2 small winners and 1, 2, 3 losers in the past 5 trades. See that? So since January 2012 has been a little bit of a drawdown. So you never want to bet the farm. I still like the idea of shorting a gap up because we are so stretched. And a gap down, all the number looks positive, even though I got to admit it's going to be a little bit tough psychologically for me buying a down gap, depending upon the size of it, especially when you get down in the body of this candle a bunch. But we could have a heat gap set up. There's all kinds of considerations in play going into tomorrow, and I'll cover them in great detail in my pre-morning analysis, which I'll post for our members around 9:20 a.m. But there's a nugget to think about and sleep on over the night. All right, let's look at the worksheet we had posted as of last night. I was hoping for a gap up, because you can see why. The average of the 8 individual gap guides indices was very positive. Win rate greater than 60%, prop factor greater than 1.3. So any gap up, I was pretty much guaranteed to trade. No risk factors posted for based upon the day or any unique patterns. In fact, let me show you my pre-market comments. Last night's video tip that I was talking about favor shorting up gaps today. Down gaps first half of May, that was a concern, but again we had gaps up in 2 of the 4 indices. So we ended up opening with mixed directions. That was the concern, and that's what I said, gap size and mixed opening directions. So I'll fade the ES with a reduced position size as long as that meant in either direction 1.5 points of opportunity down or 1 point of opportunity gapping up, opening greater than 1632, and all 4 indices gapping in the same direction. And though I do miss my share of winners by having a rule like this, normally it's at least 3 of the 4. Today, because I am in a drawdown, I wanted to emphasize I need to have all the markets. If I was going to trade a small gap, I want it to be a perfect setup, other than just the size. And let me show you what I mean. That stringency of a rule kept me out of trouble today. See, the Russell gapped up, didn't fill. ES gapped up. It's the white line. It's hard to see. The white line just above the blue line. Did not fill. NASDAQ gapped down a little bit, though. See, running through the blue line, which is the prior close. Same with the YM, gap down a little bit, run through gap fill. And um, when you're in a small gap, you're risking, say, 5 points to make 1 or 2 points. You don't want anything going against you because 5 points isn't that much. It's only half the 5-day ATR. And I don't want to have a scenario like we had today where I have two sectors gapping down. As they go for gap fill, they put upward pressure, right? They're components. There's a technology component in the S&P 500. There's a big stock component of the S&P 500 as well, as represented by the Dow. So I don't want them putting bid pressure against my short. That's why I didn't trade today. And it was very close though. It came with, well, you can't see it. It came within a tick of opening above, or 2 ticks of opening above 32. But again, these two gap down, so I still would not have taken it unless they were gapping up. So I avoided this losing trade today. That was a good thing. And I made a little bit of money today, but it was mostly a frustrating day. Let me show you why. There was a slight bias for the high breakout in the 15-minute guides. I didn't take it. Some people did take the high breakouts today. Good for them on the 15-minute. I wanted to be patient because, again, I thought there was a chance likely we'd have some bearish pressures at some point in play today because the indices favored shorting an up gap so strongly, or the gap guys did. But check out these first hour guides. High breakout for the ES met my criteria 55 and 1.1, check. Looking at the YM, check. Looking at the NASDAQ neutral, looking at the Russell, check. 3 of the 4 clearly favored. Looking at the ETFs, much of the same. Spider, check. Diamonds, check. NASDAQ neutral. Russell, check. So 6 of the 8 favored my criteria. The Russell had lots of positives on the high breakout per the advanced studies available on our website. The ES had a couple risk factors. So what I decided to do is a process, and I processed it fairly quickly, was to go long well, actually, I went to place an order to go long immediately in the Russell. It was trading at 979.50 to 979.60 right at the first hour range. So it pulled back just a tick or two. And I placed the order, went over and set up my ES trade at, because I had those risk factors and because we're stretched to the upside, I set up an ES order. And because I wanted my stop to be below the 15-minute range, several considerations here, I set up my order at 1640 and a quarter. I thought we could get a 2-point pullback. Did not happen. Went on and hit its target. And what was really frustrating was that darn Russell was trading right at my target and it just moved away literally to the second or two as I posted it. And I did not get filled. So I watched these run away without me. I missed them both. Very frustrating. But it could have been more frustrating. I could have caught losers. So I stuck with my plan, be conservative. When I'm in a drawdown, I'm ultra conservative. And let's see what else happened today. 2 other things that happened today. I happened to see the market, was watching the market around lunchtime. I know that between 12 and 12:15, now this is a little bit later, but between 12 and 12:15 noon, you often get some false breakouts to the long side. So sometimes I'll fade that move. Today was such a strong market up there around and beyond R3. We had a Chaikin volume spike. That's unusually high volume occurring right around the time frame I expect pullbacks. So I went short at 1646.5. Scaled out 2/3 at plus 1.5 and 1/3 at plus 3. Basically, I just want it to be going at a point above the first hour's range. When you're in a bullish market, you want to keep time stops, right? Don't sit on it for too long of a time without getting your first target hit. And you want your targets to be very conservative. So I've learned the hard way. I used to go for more aggressive targets. They just don't work. Anyhow, that worked out. It was a nice trade. Decent sized trade at that on a discretionary trade for me. End of the day, we had our gotcha trade. That triggered. That's a basically look for a rally into the close. It triggered on that Chaikin volume spike there. Set up my order right at the close at 1646 and 1/4. Did not chase at all. Just went right into the close of that bar. It never filled me. And then it closed up another 2 or 3 points. So that was a little frustrating. So I felt like today was just one of those days where the train left the station without me on multiple occasions. And really I'm fortunate to have caught the counter trend discretionary trade middle of the day, but that was it. I did make 2 ticks on the gotcha trade, but nothing to brag about there. And that was my day. So tough market to trade right now. Just got to stick with the plan and take what it gives us. So that is the wrap for Tuesday, May 14th. Have a good night.